In this video, let us learn about the different types of government securities. The Indian G-Secs market offers a wide variety of instruments. The G-Secs market in India consists of central government bonds, central government T-bills and state development loans. What is a T-bill? Treasury bills or T-bills are short-term instruments issued by the Government of India, which mature within a year of issue. They are issued at a discount to face value and redeemed at par or face value at maturity. RBI conducts weekly auctions of T-bills for 3 maturities: 91 days, 182 days, 364 days. T-bills are also called zero-coupon securities, as no interim coupon interest payments are made over the life of the T-bill. Below you can see the life of a 91-day T-bill. What is a cash management bill? They are basically T-bills maturing within 91 days. Government of India issues CMBs to meet temporary shortages in its cash flows. What is a dated G-Sec? They are long-term bonds issued by the Government of India. Maturities range from 1 to 50 years. These pay a fixed or floating coupon on semi-annual basis. This is the most active or liquid segment of the Indian fixed income securities market. A wide variety of dated G-Secs are available for investors. There are different types of dated G-Secs such as fixed rate bonds, floating rate bonds, inflation indexed bonds, special securities, strips, green bonds and exclusive retail bond, which has 2 other subtypes, which are sovereign gold bonds and savings bonds. What is a fixed rate G-Sec? Most G-Secs in India are issued as fixed rate bonds. These bonds pay a fixed coupon over their entire life. Typically, coupons are paid semi-annually. Normally, the cut-off rate in the primary auction when the bond is issued for the first time becomes its coupon. Let's look at an example of cash flows over the life of the bond. Here is a 6.1% G-Sec issued on 12th July 2024 and maturing on 12th July 2027. The bond has a coupon of 6.1% with semi-annual interest paid. For coupon dates, semi-annual interest paid will be Rs 3.05. On the maturity date of 12th July 2027, the face value of Rs 100 will be repaid. Each of these cash flows can also be traded separately as independent strips. Please note that the numbers and dates in this example are for learning purposes only. Actual terms and details may differ. What are strips? Separate trading of registered interest and principal securities, or strips, are zero-coupon securities created by dividing future cash flows of a fixed coupon G-Sec into individual components. For instance, the 6.10% GS 2027 bond can be divided into 6 coupon strips, Rs 3.05 per coupon, and 1 principal strip, Rs 100 at maturity. These components are tradable separately in the secondary market. Strips are attractive as they have zero reinvestment risk. What are floating rate bonds? They pay interest at a variable coupon rate that is reset at pre-announced intervals. FRB's coupons are either linked to the 6-month rate, that is, the 182-day T-bill rate, or reset at a fixed interval. These periodic interest rate resets are ideal for investment during rising interest rates scenario. This example illustrates the semi-annual coupon cash flows of a floating rate bond. You will notice that this bond, with a face value 100 rupees and a term of 2 years, pays 4 coupons each of differing amounts due to the floating nature of this bond. The fourth cash flow includes the repayment of the face value in addition to the semi-annual interest. Please note that the numbers and dates in this example are for learning purposes only. Actual terms and details may differ. What are special securities? The Government of India may issue bonds as compensation in lieu of cash subsidies to entities such as the below. Special securities are usually long-dated securities. Special bonds, even if issued by Government of India, are not SLR qualified. These bonds pay a marginally higher coupon over the yield of the similar maturity G6. What are sovereign green bonds? They are unique instruments to mobilize resources for green infrastructure. Part of budgeted borrowing, these are issued in tranches. They are issued under the Sovereign Green Bond Framework notified by Government of India on 9 November 2022. Proceeds are specifically deployed in public sector projects which help in reducing the carbon intensity of the economy. They pay a fixed coupon per annum on the nominal value paid on semi-annual basis. What are sovereign gold bonds? They are unique instruments with commodity or gold-linked prices. They are issued in tranches as part of budgeted borrowing. SGBs come in denominations of 1 gram of gold or multiples. SGBs pay a fixed coupon per annum on nominal value paid on semi-annual basis. Their redemption price is linked to gold prices and notified by RBI prior to redemption. What are savings taxable bonds? They are specially issued for retail investors at par 100 rupees for a minimum amount of 1000 rupees face value and in multiples thereof. There is no maximum limit for investment in these bonds or saving taxable bonds. The interest paid is taxable under the Income Tax Act, 1961. From July 2020, these bonds bear a floating rate of interest which is reset every 6 months. They have a maturity of 7 years and are not tradable in the secondary market. What is an inflation-indexed bond? Inflation erodes the purchasing power of money. Inflation-indexed bonds, IIBs, safeguard against inflation with a fixed real coupon rate and inflation-adjusted principal. Periodic coupon payments are based on the adjusted principal, protecting both principal and interest from inflation. At maturity, the higher of the adjusted principal or face value is paid. The first IIBs linked to WPI were issued in June 2013 and CPI-linked IIBs were introduced for retail customers in December 2013. What are SDLs or SGS? Market borrowings of state governments and union territories are known as State Development Loans, SDLs, or State Government Securities, SGS. They are semi-annual coupon, that is, fixed interest, paying dated securities which offer higher yield over central government dated securities of comparable maturity. SDLs or SGS are relatively illiquid compared to central government securities. What are Uday bonds? These are special securities issued by state governments under the Uday scheme for financial turnaround of power distribution companies. These non-SLR bonds usually offer higher yields than G-Secs and SDLs. What other types of G-Secs were issued in the past? Zero coupon bonds, ZCB. ZCBs do not pay any fixed coupon and are issued at a discount and redeemed at par like T-bills. Capital Indexed Bonds, CIB. The principal amount of a CIB is linked to an inflation index to protect it from inflation. Bonds with call or put options. These were bonds with embedded options. Recapitalization bonds. These were issued to inject additional capital to public sector banks in 2018. Thus, over the years, the central and state governments in India have raised funds using a wide variety of instruments catering to different investor groups.